Dinar shift. The financial world today has been irrevocably altered by a cascade of events many believed would never materialize. For years, the idea of a comprehensive revaluation of the Iraqi dinar and the Vietnamese dong was relegated to the realm of persistent conjecture, a story whispered in the furthest corners of global finance, and often met with profound skepticism by mainstream observers. However, the whispers have now become an unmistakable roar. This pivotal moment, long anticipated by currency holders and keenly watched by global economists, signals a monumental shift that is actively unfolding across international markets. What we are witnessing is not merely an adjustment in a few obscure forex terminals. It is the synchronous activation of a long-dormant mechanism designed to bring these two critical currencies into a new echelon of international recognition. The sheer scale and coordination of this event underscore its significance, marking the close of one chapter of financial history and the definitive beginning of a new one, where patient observation meets tangible economic change. The initial, undeniable sign that this financial phenomenon was indeed live began subtly, yet with a seismic impact on those monitoring the system. Early this morning, in the major financial arteries of the world, bank terminals that had consistently shown static, non-tradable values for the Iraqi Dinar, IQD, and Vietnamese Dong, VND, suddenly, and without prior official notice, began to refresh. This wasn't a slow, incremental drift. It was a digital flash, an instantaneous update that switched screens from historical data to genuine live exchange rates. The surprise was palpable within the high-security confines of private banking offices along the east coast of the United States. Insiders recount a brief, unsettling moment of a blank screen followed by a sudden, brilliant green signal, the universally recognized indicator of a newly active, tradable rate for the IQD. The collective gasp of astonishment quickly gave way to a focused, almost frenetic pace of confirmation. The digital evidence began to circulate immediately, serving as irrefutable proof of the shift. Screenshots of the activated rates, showing live figures for both the IQD and VND against major global currencies, spread like wildfire across secure, professional financial messaging platforms. The skepticism that had defined the past decades evaporated almost instantly, replaced by a surge of collective affirmation. This was a moment that transcended a simple market fluctuation. It was a clear signal that the preparatory work by central banks and international financial bodies had culminated in a simultaneous, synchronized global activation. This was not a localized test or an isolated data error, but a coordinated effort across continents, confirming that major global institutions were actively integrating the new valuations into their operational systems. The action rapidly escalated beyond the borders of the United States. As the global workday progressed westward, financial hubs in Europe and then Asia began reflecting the exact same live rates on their trading floors. The synchronization was perfect, an almost impossible feat in standard currency trading, confirming the highly orchestrated nature of the revaluation. Institutional trading desks, which previously would have flagged these currencies as illiquid or restricted assets, were now displaying real-time updates and processing the potential for immediate exchange. The quiet anticipation held by financial professionals for years had broken into a tangible reality, demanding immediate operational response and a total recalibration of currency strategy. Private wealth management systems, crucial conduits for large-scale currency conversions, were suddenly and definitively aligned. The sudden convergence of data prompted a series of urgent internal discussions within financial firms worldwide. Compliance departments tasked with adhering to the strictest international protocols swiftly issued internal memos. The objective was clear: prepare immediately for secure, private exchange operations for the substantial number of holders of the Iraqi Dinar and Vietnamese Dong. The era of waiting, of watching the markets from the periphery, was definitively over. Institutions were now transitioning to the logistical challenge of facilitating appointments for the secure, highly regulated exchange of the currencies. The immediate public and social reaction was an explosion of digital activity. Social media platforms and dedicated online forums, which had long served as centers for discussion and rumor concerning the revaluation, erupted with a shared sense of disbelief and overwhelming relief. The flow of screenshots, personal testimonies, and confirmation messages was unceasing. The spectrum of emotion was broad, ranging from deeply felt tears of relief to a pragmatic, though fervent, sense of optimism. What united everyone in these communities was the singular, unifying belief: The long-awaited event was now a fully verifiable, concrete reality. The years of circulating narratives and speculative claims were finally superseded by live, objective financial data. Attention then pivoted sharply to the geographical origins of the currencies. In Iraq, local banks and ATMs in major urban centers began displaying upward revisions in the value of the IQD. This was a direct, localized manifestation of the global shift, instantly visible to citizens who had quietly maintained their faith in their national currency for a significant period. The signs were tangible, a clear, irrefutable recognition of a strengthened economic posture. This visible change in local banking systems provided the first public, on-the-ground validation of the monumental economic adjustments occurring on the international stage. Simultaneously, reports from Vietnam indicated a highly controlled, though equally significant movement. While official state media maintained a characteristic silence, local banking institutions in key metropolitan areas like Ho Chi Minh City and Hanoi began implementing temporary, deliberate restrictions on foreign exchange operations. This subtle but critical operational adjustment was interpreted by seasoned financial observers as a clear preparatory measure for a carefully managed release of the revalued rates to the general public. This methodical, controlled approach underscored the commitment to stability and orderly transition, avoiding any potential for a disruptive market shock. The timing and profound level of coordination between these distinct national economies and the vast international banking system is an economic marvel in itself. Analysts emphasize that this degree of synchronization, spanning two independent central banks and numerous global financial networks, is a logistical rarity. It strongly suggests that the movements were not coincidental, but the execution of a deliberate, high-level strategic plan. The objective of such coordination is multifaceted: to recognize the inherent value of the currencies while simultaneously stabilizing global markets and ensuring an orderly, value delivery process for currency holders. As the morning progressed toward 8 o'clock Baghdad time, a critical digital operation took place. The official website for the Central Bank of Iraq temporarily went offline, a standard and anticipated procedure during major systemic data updates. When the site was restored, detailed examination of its reference rates revealed subtle but significant adjustments, a clear sign of internal recalibration, even as an official public statement was yet to be released. This action provided a further layer of confirmation that the fundamental financial architecture was actively being updated to accommodate the new valuation. Similar operational sequence was noted in Vietnam. Reports indicated that state bank officials were observed departing their facilities under highly secure conditions, a potential and customary indicator of crucial operational steps being executed behind the scenes to manage the transition. These parallel, highly secure activities in both Baghdad and Hanoi further solidified the perception that this was a unified, binational economic movement, executed with a level of security and precision commensurate with an event of this magnitude. Across the world, currency traders began observing changes on their electronic platforms that transcended mere data points. The IQD and VND were no longer exotic or restricted. Their rates now reflected immediate real-time trading possibilities against the world's major currencies: the US dollar, the euro, and the British pound. For many long-term currency holders, this site represented more than a financial adjustment. It was the definitive, long-sought-after validation that years of patient strategy and steadfast belief had at last yielded a significant, measurable economic outcome. The collective focus of the international financial community shifted profoundly. Discussions among leading economic experts moved instantly from abstract speculation about the possibility of revaluation to the immediate pragmatic task of economic recalibration. The new currency valuations necessitate a complete overhaul of pre-existing economic projections, trade balance forecasts, and regional investment strategies concerning both Iraq and Vietnam. The sheer weight of this currency shift is forcing institutions to rewrite their economic models in real time. The designated private exchange centers quickly became the operational nexus of this revaluation process. Reports detail appointments being arranged through highly confidential, secure channels. A consistent element across these operations is the mandatory signing of stringent non-disclosure agreements by all participants prior to entry. Inside these highly protected facilities, sources describe a meticulous and almost historic atmosphere, with staff guiding holders through complex, carefully structured verification and conversion procedures. The security and technological measures in place are state-of-the-art, ensuring absolute adherence to the prescribed conversion protocols. The environment within these exchange centers is described as a mixture of profound relief and an acute sense of participating in history. Participants are realizing they are not merely conducting a financial transaction, but are at the culmination of years of global preparation and planning. The broader significance is not lost. This process is critical not just for individual wealth recognition, but for the macroeconomic future of Iraq and Vietnam. The vast scale of coordination necessary for this process strongly suggests the active involvement of international regulatory bodies, all working to ensure the revaluation proceeds without causing any destabilizing market volatility. The global reaction quickly spread beyond the walls of traditional banking. Major financial news organizations began to report on the updates with carefully chosen language, frequently employing phrases such as unconfirmed revaluation or live rate testing. However, the evidence from the ground was unambiguous. The IQD and VND rates were live, executable, and consistently reflected across multiple international financial systems, leaving little room for genuine doubt regarding the fundamental shift. Specific commodity markets, particularly those focused on Iraqi oil exports, are now in a period of intense recalculation. Analysts are revising projected economic output for the nation under the new currency valuations. Concurrently, trade specialists focused on Southeast Asia are updating their forecasts to reflect Vietnam's significantly strengthened currency leverage in the global marketplace. This massive system-wide updating of financial models illustrates a ripple effect that will inevitably influence international investment decisions, sovereign debt valuations, and critical regional trade agreements. The revaluation is, fundamentally, a global financial recalibration. For the individual holders of these currencies, the emotional resonance of this moment is as significant as the financial implications. After years of enduring a climate of skepticism, facing doubts about the validity of their assets, and observing other currencies appreciate, many feel a deep sense of vindication. Online communities and social platforms are overflowing with personal stories of patience, unwavering belief, and the difficult journeys undertaken by individuals across Europe, Australia, and the United States. While the financial opportunities are clear, the symbolic validation, the recognition of their nation's economic potential, and the prospect of generational financial security are equally important drivers of emotion. The synchronized activation has also placed an extraordinary load on global technological infrastructure. IT systems across the vast network of international banks, foreign exchange, forex servers, and digital payment gateways are processing an unprecedented volume of data inquiries and potential transactions. Certain financial applications experienced temporary outages due to the sheer intensity of user activity, necessitating network engineers to work around the clock to ensure stability and smooth operation. This surge in demand highlights both the deep anticipation that preceded the event and the impressive readiness of the global financial infrastructure to handle it. Financial experts suggest that the successful, well-prepared rollout of this revaluation is indicative of careful, protracted planning that likely spanned months or even years, involving the highest levels of central banks, international banking consortia, and financial oversight bodies. The fact that the activation has proceeded without major systemic disruption is a testament to this collaborative foresight, an achievement that is a historical rarity in the often volatile world of currency revaluations. This successful transition may well serve as a new operational blueprint for future global currency shifts. The geopolitical ramifications of this shift are also extensive. The substantial strengthening of both the Iraqi Dinar and the Vietnamese Dong provides both nations with enhanced economic leverage on the regional and global stages. Iraq, with its immense oil reserves and strategic Middle Eastern positioning, is likely to see its gross domestic product projections and future trade agreements shift decidedly in its favor. Vietnam, a growing manufacturing and trade hub in Southeast Asia, stands to gain substantial regional influence. Analysts foresee consequent adjustments in foreign direct investment, export-import dynamics, and potentially even shifts in regional political alliances. As the day progressed, the systematic processing of the revaluation continued in a highly controlled, phased manner within private banking systems. Currency holders were meticulously guided through comprehensive verification procedures, ensuring strict adherence to both domestic and international financial regulations. Banks extended their operational hours, fully prepared for a potential surge in transactions, while simultaneously prioritizing security and transactional accuracy. The structured, tiered approach emphasizes a strategy of minimizing market disruption while ensuring equitable access and transparency for all legitimate currency holders. Around the midday mark, a significant operational milestone was achieved as key European clearinghouses began to officially reflect the updated settlement pathways for both the IQD and VND. Traders noted the distinct green indicators, signaling that the active live rates for these currencies were now fully integrated into international financial networks. This seamless integration across the world's critical financial infrastructure underscores the sheer scale of preparatory work, a testament to months of high-level regulatory collaboration and technological planning that preceded the event. For institutional investors, this development removed any residual ambiguity, confirming the revaluation as official, deliberate, and structurally sustainable. Meanwhile, the tangible signs of change were visible to citizens in Baghdad and Ho Chi Minh City. Local bank branches, public ATMs, and currency exchange kiosks were actively displaying the updated higher values, generating a powerful mix of excitement and curiosity. People were observed queuing, seeking to personally confirm the new rates, some witnessing the most significant update in their national currency's value in decades. The public reaction highlights the deeply personal and social dimension of the event. For many, this represents not just financial gain, but a profound public recognition of national progress and future prosperity. On a global macroeconomic level, the revaluation signals a potential shift in international trade balances. Stronger valuations for the IQD and VND will inherently impact import and export pricing, commodity costs, and cross-border investment flows. Multinational corporations are already recalibrating their pricing strategies and contract terms to accommodate these substantial changes. Financial institutions worldwide are in the process of updating risk assessments and liquidity strategies, factoring in the newly recognized value of these currencies. Economists agree that a sustained revaluation of this magnitude has the potential to influence everything from international trade negotiations to global currency reserve compositions. As the day transitions into evening in the Western Hemisphere and morning in the East, the wave of revaluation continues its steady advance. Financial platforms report sustained high volumes of activity as users ceaselessly check rates, finalize exchange preparations, and meticulously evaluate potential new investment pathways. Security protocols remain at maximum alert, with technical teams diligently monitoring system performance to preemptively address any potential overloads or data discrepancies. This sustained high-level operational vigilance underscores the historic significance of the event and the unprecedented level of global coordination required for its successful management. The ripple effects extend deeply into various sectors of the financial ecosystem. Oil and gas analysts are actively revising their long-term production and revenue projections for Iraq. Simultaneously, Southeast Asian trade specialists are closely examining Vietnam's newly strengthened export capabilities. Financial advisors are now counseling clients on the most strategic timing for conversions, the necessary capital preservation strategies, and the potential long-term financial impacts. The entire ecosystem, from sovereign central banks down to the individual currency holder, is responding in real time to this coordinated economic shift. In the digital realm, dedicated forums and social media channels are serving as a live, historical record of the revaluation. Holders are sharing transaction confirmations, proof of exchange, and personal, often emotional accounts of the process. This public documentation, which blends financial reality with human experience, may help to maintain confidence and minimize the spread of misinformation, a common risk during such significant financial events. For the participants, these digital records are both personal proof and a collective historical archive of what many are now calling a turning point in the global currency landscape. The decisive role of international financial institutions in guaranteeing a smooth rollout is indisputable. The coordinated effort involving central banks, international clearinghouses, and private financial groups allowed for a remarkably seamless activation of rates. Experts note that this level of cross-institutional collaboration is exceptionally rare, further highlighting the meticulous planning and extensive communication that preceded today's events. The visible, simultaneous green signal across global trading terminals serves as a definitive visual testament to this complex, high-level coordination. As the full day's activities draw toward a close, attention is naturally shifting to the long-term economic and geopolitical implications. The primary question becomes, Will this revaluation translate into sustainable long-term economic prosperity for Iraq and Vietnam? The reaction of other emerging markets, especially those with comparable currency structures, will also be closely monitored. Analysts predict significant adjustments in global investment flows, amendments to existing trade agreements, and a necessary revision of regional economic policies. For holders of the IQD and VND, strategic execution and careful financial guidance will be paramount to navigating the post-revaluation landscape. The fundamental human narrative underpinning this financial event cannot be overstated. After what amounts to decades of collective waiting, enduring intense scrutiny, and facing a constant stream of doubt, currency holders are finally witnessing a profound validation of their long-held position. For countless individuals, this revaluation is not merely an economic transaction. It is a symbol of their patience, persistence, and deep-seated faith in the future of these nations. The emotional response, ranging from cautious celebration to tears of relief, reflects the deeply personal sacrifices and familial planning that were made in anticipation of this exact moment. Bank branches and financial institutions worldwide report a markedly higher volume of foot traffic as citizens seek to personally verify the new rates and access updated financial services. ATMs, local bank kiosks, and teller counters are actively displaying the refreshed values, and local residents are engaging extensively with staff to fully comprehend the comprehensive implications of the shift. This high level of public engagement is deemed a critical factor in ensuring both confidence and transparency, helping to rebuild and reinforce trust in financial systems following a long period characterized by undervaluation and significant speculation. From an international perspective, the scope of the shift is equally critical. Economists and currency traders around the world are fundamentally recalibrating their projections for currency strength, global trade balances, and geopolitical influence. Investors and large institutions are monitoring emerging data in real time, making high-stakes decisions that reflect the deeply interconnected nature of global finance. This synchronized revaluation serves as a powerful demonstration of the complexity of modern economic systems and the sheer level of orchestration required to manage such a significant shift without triggering market instability. As night falls in some parts of the world and the sun rises on a new financial day in others, financial platforms report consistent and unwavering system stability. Traders are observing the live IQD and VND rates seamlessly trading against all major currencies, definitively confirming the global acceptance and integration of the revaluation. The flawless integration into international clearinghouses, forex networks, and payment gateways suggests an activation that was not only planned but executed with an almost unprecedented level of precision and coordination, a potential model for future international financial events. The social implications continue to resonate powerfully. The global community of currency holders, long dispersed and connected only digitally, now shares a unifying, transformative experience. Online forums, social media channels, and private groups are vibrant with discussion, concrete proof, and deep emotional sharing. Analysts believe this unique social cohesion may positively influence post-revaluation investor behavior, reinforcing collective confidence and encouraging a responsible engagement with the newly valued currencies. For many participants, the revaluation has become a landmark moment that blends economic reality with a shared human triumph. This global revaluation of the Iraqi Dinar and Vietnamese Dong stands as a truly historic milestone. From the highest private banking floors to the most local public kiosks, and from international clearinghouses to the private holdings of individual citizens, the world has witnessed a coordinated, deliberate, and profound financial transformation. The crucial financial switch has been flipped. Screens have turned green, illuminating a new market reality, and the future of these two currencies is fundamentally and permanently changed. The implications for investors, global citizens, and financial observers are immense, promising new opportunities for wealth recognition, strategic economic growth, and potent national empowerment. This is a moment that is being recorded today, to be studied, remembered, and celebrated for generations as the Iraqi Dinar and Vietnamese Dong enter a powerful new era of global significance.